It's been 1 month since I started my carry trade experiment, and it has gone really well. The daily income keeps rolling in, even on the weekend, and my account keeps growing. But it wasn't without its challenges. My interest income got cut in half overnight, and I had to learn how to rebalance my portfolio. I started this on the 1st of July by investing £100, which I split into two trades. I went long on Brent crude and short on natural gas. There are two reasons why I did that. One, they offered really high financing fees. And two, I expected that they would be somewhat correlated and trading them in opposite directions would hedge my trade a little bit. The way this strategy works is that I'm not actually trying to predict which way oil and gas are going to go. Instead, the main point of the strategy is to collect financing fees. There are some trades where my broker will actually pay me to hold those positions. This is called the financing fee, and this is what I get paid every day. The idea is just to hold these trades long term and collect this daily income. And so it went like this for the first few days. The financing fees kept rolling in at around 40 pence per day. That doesn't sound like a lot, but this is on a £100 account, and it quickly adds up. In addition to this, both trades have actually moved in my favor. So not only have I been collecting the financing fee every day, but I also have an unrealized profit on both natural gas and Brent crude. This disproved my assumption that they were correlated, but I was in profit, so I'm not complaining. This steady income continued for the first 3 weeks of July, but then on the 22nd, I noticed that my payment dropped from 40p down to 20 pence. So it halved overnight. I quickly checked Oanda's rates and I saw the reason. The financing rates dropped sharply on both of the instruments. Natural gas was paying 37.4%, but now it's dropped down to 14.8%. Brent crude was 19.7% and that's dropped down to 13.8%. Nothing else had changed on my positions, but now they just pay less financing. And this is one of the risks of this kind of strategy. The rates can change at any time. But 14.8 was still a decent amount, so I didn't change my natural gas position. I stuck with that one. But what I did notice that while Brent crude dropped, West Texas oil actually increased. Previously, this was sitting at 6.5%, and then it jumped up to 17.3%, which meant that I had the option of swapping my position, selling my Brent crude and buying the equivalent in West Texas. I calculated that this difference in interest was going to earn me about 4 to 5 pence more each day if I switched. However, I would have to pay spread for exiting my position in Brent crude and then buying a position in WTI. So I headed over to Oanda's spread cost calculator and I typed in my numbers. This showed me how much the spread was going to cost in each of the transactions. I did this both for buying WTI and for selling Brent crude. And it worked out to a total of around 16 pence. That meant that it would take me around 3 to 4 days of this higher interest to recoup the cost of changing instruments. Of course, the risk in that time is that the WTI rate drops back down or that Brent comes back up, but it seemed worth the risk, so I took that trade. I closed out 5 units of Brent crude and I was able to buy 6 units of WTI to replace it. But remember, Brent crude had moved in my favor by this point, so once I sold it, I actually made a profit of 59 pence, which was a few days interest that I could add onto my balance. This brought the daily financing up to around 24-25p a day. The financing fee on Brent never did come up, so switching from Brent to WTI worked out to be the correct decision. It might seem insignificant to go to that level of detail just for the sake of a few pence, but keep in mind that all of these numbers scale with the balance. I'm using a small balance because this is an experiment, but if that balance was bigger, then these numbers would also be bigger, and then they become more significant. At the end of the month, it was time for me to rebalance my trades. There was no change on WTI, but my natural gas position needed to be increased by 20 additional units. There were two reasons for this. One was that I had earned some interest, and so my balance was bigger. But the second reason was that the price of natural gas had declined. The financing fee is calculated based on the value of your position, which means the average price multiplied by the number of units. This gives me my position value, and this is what the finance rate is then calculated from. So if the price of that instrument has declined, then that means that this number here will also have decreased. To keep it at the same and to make sure I'm still getting the same amount of financing fees, I had to increase my number of units. So I went short an additional 20 units around here. This essentially means that I'm adding to the position as the price is moving in my direction, which is kind of the opposite of what I would want to be doing ideally. You want to be buying low and selling high, or in the case of a short trade, I would want to be going short high and I would want to be exiting those positions down here. But the way the carry trade works means that on a short carry, I'm forced to actually increase my position at a less favorable price. And this isn't something that I'd thought about previously, but I've now realized that a carry trade in the long direction is far better, because as the price moves in my direction, the position value also increases, which means that the financing rate also increases as a result. So in future trades, I would favor a carry that's in the long direction. And this is where I was after a month. On the 1st of August, once I had a full month's worth of results, I had a balance of £110.97. This was a result of a carry profit of £10.38, in addition to that 59 pence that I made from selling Brent crude. So just based on that alone, my account was up almost 11% for the month. But in addition to that, because I had a floating profit of 24.62, in total my equity was sitting at 135. So including everything, my actual equity was up 35% for the month. Even with the cut in the financing rates on natural gas and Brent crude, this has been my most profitable strategy. I'm going to stick with this for a second month and maybe even add some more instruments if the rates are good enough. I'll make another update at the end of August, so make sure to subscribe to see how that one goes.